So yeah, let's waste no time for me to introduce myself and the panel. My name is Andrew Carr. As you can see, I'm a principal engineer at ScotLogic, and I care very much, I guess, about operational resiliency from a personal point of view. As a developer, I've been involved with I don't know how many BCP tests, coming in at the weekends, testing things out, making sure stuff works. So yeah, as an ex-engineer, I count myself as someone who cares about it because I want to know, what the future holds, I guess, for system designs. Phil, do you want to introduce yourself?
Sure. And firstly, thanks very much for inviting me, Andrew, on this. Looking forward to the next hour, and hopefully I will learn a little bit myself as well. So I work in the executive office of Goldman Sachs. I run a team which manage some of the most complex initiatives we have, business initiatives, but also regulatory initiatives, efficiency initiatives, those types of things. And I would say a lot of focus really, probably since the financial crisis, has been particularly on regulation. And, regulation has really sort of, I guess, changed in all jurisdictions, certainly in the UK, but also Europe, US, etc. since that point. And that's a lot of the big pieces of work that we have to do. And one of the big bits that I guess of regulation that's come up in the last few years and is ever expanding is really around operational resilience. It's a very complex area, and I have the pleasure within the firm of helping us navigate through some of those new regulations. And also, and I'll probably talk a little bit about it later as well, but it's not just about adhering to the regulation that we have, it's also making sure that for our own benefit and the industry's benefit, that I guess the more resilience we have, the better.
So I'll be asking you, I guess, questions about that, Phil. And I'm certainly interested to dive a bit deeper. And I guess being at Goldman Sachs, I know you guys probably depend upon services from other financial services firms as well. So I imagine their success is your success in many ways. Andrew, would you like to introduce yourself and tell us why you care about operational resiliency? That's not an easy word to say, is it? Resiliency.
Yeah, sure, Andrew, thanks. Hi everyone, I'm also Andrew Lawson. I'm a staff engineer here at Monzo Bank. If you haven't heard of Monzo Bank, we're a consumer bank for both individuals and businesses in the UK, the US, and soon to be the EU. And really we're here to make money work for everyone. That's our mission. I said I'm a staff engineer, so really as a staff engineer, I guess my job is to identify our largest risks and our biggest opportunities really, and go out and tackle them, build a team around that problem, and bring the business along with me. So really for operational resilience is one of our greatest risks, I think, as a digital bank. And that's one of the things that I worked on throughout last year, and I'm continuing to work through. And so with DORA and other regulations, that's kind of why I'm interested. So I'm here today to talk about some of the things that we did over the last year and a bit, and hopefully I'll learn some things, and hopefully I'll be able to share some of the things that we did. That's me.
Cool, thanks, Andrew. And I guess just hearing from you saying that, I guess your first market has been the UK market, but Monzo sounds like they are looking at Europe, or
yeah, it's true. Yeah, we're expanding quite widely. Yeah.
So I guess in terms of operational resiliency, you care about the UK Operational Resiliency Act and DORA as well, I guess. And obviously Goldman Sachs care about the DORA because of their international footprint as well. So sounds like DORA is going to be one of the key bits of the discussion today. Cool. And Laura, do you want to introduce yourself and why you care about operational resiliency, and possibly why you can probably say it better than I can as well, but yeah.
I'm not sure I can, I'll probably trip over it. So yes, hi everyone, my name is Laura Hyatt. So I'm a cloud architect at Google Cloud, specifically looking after financial services. So I design architecture for customers, so not for Google Cloud itself, but for our customers. And a big thing that I've noticed in the last couple of years is around either architecting for resilience or sort of re-architecting based on the new regulation that's come out. Operational resilience UK, but also DORA, that is definitely a big one that I hear again and again and again, and especially at the moment, because sort of the first iteration is due January, I think it's January 17th. coming up soon. So I think for me, why I care about it, or why I think it's really important, is that up until I would probably say the last couple of years, I've been talking about resilience for a number of years now with customers, but it was kind of always, we know we need to do it, and like a long list of other things that needed to be done beforehand. And it was almost that thing that wasn't really looked at until something had happened, and then you're kind of like after the fact trying to change things. And then it's interesting now that almost like the conversation has shifted, or the focus has shifted because of the regulation. It's almost like you have to. But where I kind of, I'll say where I come in, but where I want to kind of have those conversations with customers and help them is actually, there's lots of things that you can do to help your business overall, and not just because you have to because of this regulation. There's lots of other benefits too. And it doesn't have to be this huge, great, big operational change. So kind of that's what I want to talk about with customers and kind of help them with.
Brilliant. Yeah, and we definitely will ask you more questions, I guess, as we go through the discussion,
Yeah,
Laura. I'm conscious that the EU, obviously with the DORA Act, have come in and I guess classified critical service providers as being important as well. I guess historically the regulation has mostly been on the financial institutions, and obviously DORA and the UK Operational Resiliency Act impact those. But now I guess DORA particularly refers to key bits of infrastructure and providers, and I think we're all guessing. I'm pretty sure. I think all of us would be amazed if Google weren't included in that. But,
exactly. Exactly. And obviously a lot of financial services have parts of their applications on, Google Cloud and other cloud providers as well. But if your sort of most critical applications are running in the cloud, then that third party, like Google Cloud and the others, are obviously designated as a critical third party. Yeah.
Brilliant. Cool. So I wanted to ask the question, what actually is operational resiliency? Because I think I've got an understanding, or at least it's probably a basic understanding. I'm sure that there's probably a legal understanding. For me, I guess I think mostly in terms of systems being operationally stable. So, the ability to keep going when things go wrong. I guess things that go wrong could include like cyber attacks and stuff, or services going down. But actually, what do we believe operational resiliency to be? I don't know, Phil, whether you have, given your position at Goldman and the fact you've looked at it, whether you have a bit of a view on, how you would define, I guess, operational resiliency.
Sure. And look, I'm relatively new in this space. As I say, I look at various different projects. It just happens to be that in the last couple of years, I guess, this is a big area for many firms like us. And I would say, you defined it a little bit with a system angle. And I'd say the EU are doing a little bit of that with DORA. It's a bit more sort of digital, a bit more system. I think the FCA, PRA, it's a little bit wider in terms of it's really overall about your business processes being resilient. But clearly a big part of that is the digital piece that all business processes now rely on. But it shouldn't just be the technical piece. It's the overall, can you continue to serve your clients, serve the market with that particular business process? Maybe go on, Andrew.
Well, and actually I was going to ask about that, because I guess I at a certain age that I remember going into shops, and when I would give my Visa card, they'll get a little machine out and put the machine in a little thing to put your card across. And I was in a shop, I think it was about a year ago, their card machine failed. Someone mentioned, I think we've got one of those old Visa things. The assistant, and bless them, I think they were in the 20s. I'm not trying to be condescending. They obviously hadn't seen one of these before. They couldn't work out how to put it together to do the Visa thing. Now, it kind of felt like to me it was a happy accident that they had some of that material in the shop, only because I was of a certain age that I knew how to do it. The shop assistants on their own would not have been able to operate that. I guess that's a manual backup for a business process. I
think most cards don't have the embossment anymore, do they? So
that's true. So
even sure they work. I don't know about Monzo cards, but I suspect that backup isn't available in many cases.
So in which case, like how how divorced can the business process be nowadays from the systems? Are there what could be viable to be like a backup business process to that isn't a system backup now? But are we getting to the point where technology is so invasive everywhere that the two are becoming so intertwined that the EU are looking at systems and it is just all systems? Or is it actually there can be manual backup processes? Maybe they just write everyone's phone number down and they agree to come back in the shop and pay for it later by trust, or is I guess
I think there's very little. I think it's more about having multiple digital backups, to be honest. Like, for example,
Okay.
on this, I'm thinking about this webinar, sitting at home. If my internet provider goes down, the most chance I have of getting back up is perhaps using my mobile phone data to try and log myself back in. I thought of that before this meeting in case it happens. Hopefully it won't, right? But I'm not sure that there's a more manual backup in terms of, okay, let's all meet up in an office somewhere and continue the webinar from there. I think we'll have missed our hour slot. So I think it tends to be more about, multiple digital backups as opposed to a manual.
And obviously, I think a lot of, and you started talking, Phil, about the fact that I guess companies are looking at this a lot now. I guess Goldman are looking at this a lot because the regulations are there. But I guess you also mentioned that actually the a lot of companies do really care about it anyway. So I suspect is a certain amount of this documenting the current manual or system processes, and some of it looking to improve stuff. I assume it's not just companies aren't just going from absolutely nothing to going right. We need to put operational resiliency in everywhere.
Absolutely. I mean, I think it's both of those things. Like, there's certainly an argument that with some of the regulation, really all the things in the regulation you should almost be doing already. But yes, you may not have exactly the documentation in place to show that. But also, I think I'm sure there's a tendency from all firms maybe to cut the odd corner, and with the business focus and such. And I think the regulation helps to ensure firms don't do that at all. So really increases the focus. I mean, certainly under DORA, for example, there's the actual management bodies of the legal entities under DORA start to have criminal liability, I think, under DORA in terms of if something goes wrong. So, that ups the game, I guess, of the various firms if they've got that backing in terms of when, an engineering department or an operational risk department comes to the board and says, oh, we need to do this. I think the argument's a little bit stronger with the backing of some of those regulations.
Cool. And I guess, Andrew, we've been chatting a little bit about, from a kind of manual point of view, doing assessments and filling in forms, but giving a kind of detail and the risks in the system. But things can be system solutions as well. And I know from my point of view, obviously I saw the LinkedIn post about Monzo stand-in. I, as a techie, was super excited when I saw that post. I then shared it with quite a few of my colleagues who also got quite excited. I'll be honest, I'm probably one of many people who have a Monzo account. I love the app and the card. I think it's quite I guess a new generational way of doing banking. What can a system approach be to doing kind of, I guess, operational resiliency and specifically, could you talk us through like Monzo stand-in, what you did and why you did it?
Yeah. So I guess that if we think about just usual business continuity planning, certainly from a technical perspective, people typically think of disaster recovery sites or kind of thinking about it in terms of hardware failure. So whether that's the network has gone down, like we're just talking about, or your data center can't be accessed for whatever reason, or there's a flood in your data center even, or something like that. That's the kind of thing that people at least used to think about. But I think that more and more as we depend on cloud providers like Google, I think that it's becoming more of a software problem, I think. So I think that what we can do is something that effectively addresses that software problem. So as well as addressing running your system or running a system in another provider, whether that's your own data centers or another cloud provider. I think we also need to think about running a different system, not just the same software that depends on the same things, because it could be that same software that's the cause of the failure. So at Monzo, we built a system that we call Monzo Stand-in that is running different software. So we have like a different card issuer processor, a different processor for our bank transfers, a different API, a different set of everything really, that runs in a different cloud provider. So we run Monzo Stand-in in Google Cloud Platform, where our main platform runs in Amazon. We do that effectively to mitigate the risk of Amazon outage, an outage of our own platform within Amazon. So that's if we've we've caused an outage in our platform, or a dependency that we have on software. So that's where Monzo Stand-in really came from.
Brilliant. And yeah, I'm certainly, as a geeky techie, I'm going to ask you a few questions about it later, Andrew.
Yeah.
And I know that you were talking that there's going to be a blog post hopefully soon detailing in more detail. So yeah, really looking forward to that. I don't know whether it's out yet or it's coming out soon, but
yeah, it's not. We aim to get it out today so we could share it today, but we're a little bit behind on that. But yeah, okay. Soon, and we'll make sure that we share it with folks here.
Yeah, I'm sure we all on this call appreciate having multiple deadlines. I'm sure you've got other system deadlines you have to do than put blog posts out. And Laura, I guess, so we've heard from Phil, I guess, about what Goldman Sachs are doing. We've spoke to Andrew about what Monzo are doing. From a Google point of view, obviously the deadline is in January, as I guess we mentioned, and you mentioned the date as well. I think Phil mentioned, there's fines for companies and potentially criminal proceedings. From a Google point of view, is there any other kind of drivers? And I assume, Google's going to be, I guess, designated a critical piece of software. So I guess you're impacted from that point of view, but also I guess you're impacted, as you said, because you want to kind of help your customers. And yeah, can you talk a bit about that?
Yeah, I mean, obviously from Google, internally, obviously there's things that we need to do to be compliant, and we have teams that are obviously doing that. And obviously, as from a customer perspective, then we'll become compliant or are compliant. And obviously, you can view those compliance documents. But where I come in and people like me is that because, as Andrew was saying, similar with AWS and other cloud platforms, if your applications are running on Google Cloud, that's the point. If you're building your applications on a cloud platform, you are giving some control away over hardware, the infrastructure, the data centers, things like that. And so you want to make sure that those third parties you've assessed correctly, you have mitigation in case things outside of your control go wrong. For example, a region could go out, very unlikely, but you do need to kind of be prepared in case that happened. Or even simple things like your instance that your compute is running on goes down, and that occurs a lot more regularly. And so you need to kind of be, okay, well, how do we mitigate against that? And so that's kind of where the conversations are kind of happening at the moment, is understanding actually the reliance on these third parties and what you can and can't control and how you can mitigate against them. And I think, not to say that there hasn't been that understanding before, but I do think almost because of these regulations, there's a lot more focus on it to actually understand what is happening under the hood. And I think sometimes with that shared responsibility model, while that has been a thing since cloud has, kind of come about, I think there's a lot more focus on it from customers going, okay, actually, I want to understand who is responsible for what part of that shared responsibility model and what does it mean. And even if the part that, Google is responsible for, the data centers, you still need to understand if something happens to the hardware that in those data centers, it's still going to affect you. So you need to understand actually what can I do to mitigate against those. So there's been a lot more focus, I think, because of these regulations, and people are actually kind of taking a lot more care to understand how their applications work and how to sort of look at alternatives, not to say like off cloud, but just having backups, different routes, etc.
Okay, so I guess you brought up a few really good points there. So you mentioned that I guess people are probably a bit more aware now on the dependencies. So saying that you put your software into the cloud isn't a fix-all, that actually there's no risk now. It's taken over by a third party. They've got it covered. And actually that isn't a complete solution. Yeah, and you still have to think about what could happen if this and that. And I know you talked about kind of regions going down, which is less, is not the norm or common. I guess there have occasionally been like documented cases in some of the large cloud providers of certain services in certain regions going down at certain times. So that's not impossible, and I guess defending against that and thinking about that. And I guess also you're saying about kind of companies understanding the risks, and I guess I wanted to bring you in, Phil, because there's not a way to, I guess, systemize every backup, and what is the documentation and kind of things you need to consider to understand your risks and look at your kind of your IT estate as an organization and go, actually, how do we understand our risks? Is it a huge amount of work? Is it going through and doing kind of how I imagine kind of spreadsheets and writing BCP plans, or is it more involved than that?
I mean, there's all those things. I mean, and actually on the sort of the third party side, one of the 5 pillars of DORA is a third party pillar, which basically means how our relationship that we have with our third party providers. And one of the largest pieces there is effectively repapering, recontracting is expected with most of our third parties, and we know that can take an awful long time in the industry, and it's certainly one of the things that AFME and the industry more wider has definitely been concerned about, just in terms of the time that it will take, even though it's a very positive thing, because it is about making sure that we do understand some of the risks of our third party. They're more transparent with us in terms of what their risks are, what their perhaps sub-outsourcing might be. So, to your point, Andrew, and DORA is helping drive this, you really need to make sure that you can't just say, oh, our third party's doing this. If they have a problem, well, it's their fault. No, if it impacts the service that we're providing, it's absolutely part of our problem too. So, that relationship's only got to get closer. And I think that's a part of sort of firms that maybe wasn't necessarily top of mind to people. So where the stuff we could control is in some ways much easier in terms of our internal pieces, our on-site, be it data centers or software and such. Whereas it's a lot harder, or it seems a lot harder, when you're starting to go to that third party, fourth party, but equally important.
So the dependencies and dependencies of dependencies. So if you depend on someone and they depend on someone else, and it's a critical part of their service, I guess this documentation trail highlighting all that risk actually is a really valuable thing, as well as being, I guess, because sometimes paper-based exercises can feel like they're something you have to do, but actually the way you're talking, it sounds like it's actually a value to the industry as a whole. Yeah,
totally. And I think ideally, as much as you may have started doing the documentation, be it on a PowerPoint or whatever, I think the important thing is often to at least systemize that, so you can have the information at your fingertips, or as close as possible, in terms of, yes, we're using this software. This software is dependent on these 3-4 things, and those 3 or 4 things may be dependent on the next. So that when maybe sometimes you hear in the industry, or someone's got a problem, you can start to analyze the impact that you would expect on your own systems, even if you're not actually using that particular third party directly yourself.
Got it. So, and I think I've heard this a few times, a kind of system generated SBOM. So I guess software bill of materials, where it lists all the components in the software, and then you can go through and then go, okay, where do all those components come from? And I know, historically there was a big drive, I guess, within financial services to make sure that all the software you're using is supported to some degree. So you're not including third-party software that's outside of its support. I think that's a change from, and I've never seen this, by the way, it's just a rumor that generally goes around financial services. I remember hearing about an old a Solaris machine that wasn't operating for a particular service running on it, and the bank, whoever they were, going onto eBay and then trying to buy a Solaris machine as a replacement. I mean, that sounds like, I mean, I'm pretty sure that doesn't happen nowadays, but I can imagine that happening, in the 90s or the 80s, when I guess, people didn't take supported software and supported operating systems so seriously. I guess, Andrew, you seem to be nodding away there. Is that something that you've heard too, or seen, or
it's something I've heard too? But I was thinking it's not Monzo.
No, and I think it's one of those things that everyone says they've heard of it, but you never meet anyone who's actually done it. But I guess I think certainly my experience now within financial services, no organisation would take that, do something like that. It just wouldn't be allowed. I think people would be absolutely up in arms, and to the point now where even third-party libraries, something is out of out of support, it absolutely gets updated and replaced, or this is something that tends to get raised to, I guess, quite senior within businesses. Certainly, I know as an organisation we often get involved with helping companies migrate off software, so I think everyone seems to be taking it seriously. But yeah, I guess historically, who knows, we can't go back in time and find out.
I think, apologies, just to add, I think to Phil's point, I'm seeing a lot more conversations that are this kind of almost, not to say partnership, it's always been a partnership, but between myself and obviously other architects and the customer, having much more granular discussions, and it working both ways. Customers are asking a lot more questions about, okay, well, tell me about the RTO and RPO of these individual services, that Google provides, and wanting to understand that. Whereas I think, again, historically a little bit more like, okay, this is what the SLAs are on the website, we'll look at that, but actually that's as a service as a whole, not individual times, for an individual machine. And so I think there's a lot more kind of almost like that back and forth, which is great. I want customers to ask those questions and to challenge things and make sure they're, understanding of what the terminology as well means, because I've had conversations with financial services, or at least people from it, actually not understanding SLA and RTO and RPO are not the same thing. And so actually having those conversations, those two-way conversations, I think are really important. And I'm glad that seems to be the direction that we're moving in.
Okay, so maybe a side effect of all this legislation and I guess interest in it is that the customers are becoming, I guess, more advanced in their thinking and their understanding, but also in their I guess, energy that they spend on it and want to have conversations. That's really
absolutely. I think just on that's only going to make the industry and everything much better, because if customers also challenge us, then that may make us think about the way that we build our own infrastructure. And so it's going to have this up effect, basically. So I think it's only a good thing. So
I guess I've got a question for yourself, Laura, and you, Andrew, given this. So obviously there's loads of new systems being designed. I think this year, the number of conversations I've had with clients in financial services who have talked about building their system for the first time in the cloud has hugely increased. So, we saw it in the public sector a good few years ago that they were, commonly going cloud first. I guess financial services, because it's been regulated and has been a little bit more nervous about doing so, but definitely recently I'm hearing much more stories about it. Is the move to cloud, and it definitely seems to be picking up more momentum than I've ever seen in the past for financial services, has that impacted people's interest in operational resiliency? And if so, how?
Well, I think working so closely with regulators in financial services, I think in the last, even just 2 years, I can see our regulators becoming more accepting of financial institutions running systems inside of cloud platforms, even to the point where, kind of going back to that Celerius box, it wasn't quite, I guess the expectation wasn't quite like that up until 2 years ago. But even up until 2 years ago, the expectation was that if you're running HSMs, or you're keeping private keys and running security for your payment systems or whatever it is, that you're using hardware systems and they're your hardware that you maintain and you run. But up until about 2.5 years ago, certainly in the UK, our regulators seem a bit more accepting of cloud HSMs and like cloud key management systems and things. And that's certainly helping the conversation around how we operate, or like other banks operate their systems, but also things like, I guess like payment schemes, if you want to call them that, like MasterCard and Visa. They're now offering like cloud integration, so you can effectively plug into like an Amazon like network endpoint or one in Google Cloud or something, and you don't have to run any of Visa's hardware or MasterCard's hardware. So the payment schemes are getting up to date, the regulators are getting up to date, people seem to be heading more towards cloud, which is great. But I guess for them to be accepting of that stuff and for us to build with those things, we have to show these are the ways that we mitigate failure, these are the ways that we can continue to operate, these are the ways that we can give our customers the money that they hold with us, even if these cloud providers go down.
Yeah, and I think just to add to that as well, I think by kind of this move to cloud and the shift to cloud has also expanded, when I say choice of ways of architecting to be resilient, I think it's just, so on cloud, obviously there's like a whole range of services that are pre-built essentially. So all these managed services. And so I think it's almost opened up kind of, not to say open up eyes, but kind of there's lots of different options that actually, oh, we could integrate this, monitoring service, this logging service automatically. And so actually it's almost made it easier to enhance the architecture that you've got or build from scratch if you're doing a new system. And so I think actually the shift to cloud has opened up kind of this range of options to make architecture much more resilient from the get-go. And obviously if it's a sort of a, existing system, to enhance it as well.
Got it. So actually moving to cloud in some ways gives clients, companies more options and more things they can do quite easily. And I guess we'll probably chat a little bit about that in a minute, because I'm going to now move to the art of the possible, and I'm going to come and ask you, Andrew, about what can be done in terms of Monzo stand-in, and I'm going to ask you, Laura, in terms of what can be done easily if you're building a new system, I guess, without breaking the bank. But first of all, I'm going to look at you, Phil, and ask you the question. We briefly talked about automating risk reporting. What could potentially be automated, and how far can it go, and how much is still going to be manual for a while? I'm just thinking in terms of the overhead for large companies, because obviously if it was fully manual, I'm assuming that would be a very large overhead, certainly for the larger organizations. But what could potentially be automated in terms of risk reporting to make I guess everyone's lives easier?
Yeah, look, I mean, I'm sure there's a continuum here, right? Like, I guess you want to move away from having too much, like, okay, once every 12 months we send out a questionnaire to our system owners, and they fill in a form and say, yeah, this is where we are, collate the data. Oh, that's the risk we've got. So, but then to have everything, I guess the vision is to have everything in some kind of telemetrics dashboard, look at all your sort of ICT technology assets, and have a bunch of stats about them in terms of when did they last fail over, when did they last upgrade their operating system, when did they completely rebuild their code, etc. When did they last do a test, and then maybe at a higher level, when did we do a more business service test? So that's what you're looking for, and you're basically trying to collate as much of that data automatically as possible. I think I'm sure everyone's on a journey somewhere towards those types of goals. And some bits will arrive sooner than later. But I'm sure there'll always be a little bit of also reliance on a more manual approach, to be perfectly honest. And some things, in terms of actual, perhaps, dry running an incident event, right? You can't really automate that. You need to get people around a table and say, okay, let's imagine this scenario. Let's see what would you do? How would you react? What sort of communication would go out? That I think you need to do in a physically manual people way, and you need to do those to make sure that you keep the ability, the knowledge of how quickly to do that. So when an event comes, you're not scrambling around. You've actually 6 months ago or 3 months ago, I actually went through a similar event like this in a dry run, so it's top of mind. So that I don't think you can automate, but so as I say, I think there's a continuum. but definitely we try to move and strive towards much more sort of clever telemetrics about the state of where we are. And so you can pinpoint, if there is an asset or two that it's like, oh, actually, it's coming up a little bit red on some of the indicators here. That's perhaps where we can dive into a little bit further to try and manage the risk.
Cool. So that sounds a very proactive, like the image you give is, I guess, and like you say, I'm guessing the industry will take a while to get there, but it's a very proactive kind of I guess vision that you describe, where you have all this telemetric display and you can start to see some measurements going a little bit red, and then you can take action before things go wrong. So from your view and what you see, you think it will take the industry a few years to get there. DORA's obviously coming in next year, but actually that sounds like this isn't, January isn't the end of it. It sounds like the industry is going to be a bit of a journey, even though DORA's.
For sure. No, that's a really good point. And I mean, in some ways, if you looked at some of the regulation, you could probably meet some of the regulation as well in a more manual, perhaps, way, in terms of, more a little bit that questionnaire in terms of, okay, have they done all the things that DORA said you're meant to do? Great, we feel good about it. And let's check again in 6 months, 12 months time. So this is something I think really sort of in parallel with some of the regulation that isn't necessarily asked for the regulation, but clearly like this is an evolving area. And, in the same way, when I started many years ago and we talked about disaster recovery and such, it meant one thing. It means a very different thing now today. And in 2 or 3 years' time, it's never that you'll get there and say, oh, yeah, financial services are now in a good place, because something else will have changed and we'll need to, catch up with whatever else the next sort of technology changes. As, a little bit back to some of the points earlier around cloud, though, I do think, and I'm not a sort of specifically technical person knowing the great detail of cloud, but it's certainly not a silver bullet. But the fact that some of the hopefully operational resilience sort of experts in a cloud environment working for many, many different firms concentrates a bit of risk, yes, but it also concentrates a bit of expertise, rather than each individual financial firm necessarily running their own data centers, worrying about their own operational risk, etc., and all the things that needs to be done. So whereas you can take advantage of a lot of the tools of some of the cloud providers in a very centralized way. So definitely in my view, it feels like that's a helpful direction in terms of improving our operational resilience.
So, Andrew, I was going to move to you. So obviously Phil's just talked about kind of automating the metrics. I've wanted to talk to you a little bit more about Monzo stand-in and about something that you guys have actually done in terms of operational resiliency. I'm going to have to get that nailed by the end of this webinar for live systems. So, and you mentioned actually something that caught my ear, and I think we've talked about it before, but not only are you protecting against, I guess, challenges with one of the cloud providers, and I know you use AWS and you use GCP, so two big cloud providers, but also you mentioned about Monzo themselves, writing something in a way that doesn't work, and so it kind of implied to me that you were writing things multiple ways to, and make sure something works. So yeah, I'd be really interested to hear a bit more about that.
Yeah, I guess this kind of comes back to something I was saying before about how I guess BCP was always about like the hardware failure, and more it's becoming like, or it is about this, failing software, and it's not just third-party software that fails; it's also your own software that fails. And so thinking not just about how do we quickly fix a thing, but do we have another mechanism that we also have like in-house that we can use to recover from an incident in one part of our software? That's kind of the thinking on that. But also thinking about like some of the things that Phil was just talking about around having like metrics and dashboards to kind of show where your whole business is going wrong, to fail over, and how like maybe it would take like a very, very large uplift to automate the failing over or like the continual operation of that. I guess in some respects that's kind of where we are with Monzo stand-in. We have automated that, but instead of thinking about it in terms of recovering our whole business if there's an outage of something like AWS or some of our own software, we're focusing really, really narrowly on like the things that are the most important to our customers, and we're focusing on making that resilient. So like there's lots of like business features that we have that we just, we choose effectively in our Monzo stand-in system to not provide, and that helps us focus on automating the bits that really matter.
And Andrew, just on that, so at any one time, if I'm a Monzo customer, and I guess I've woken up in the morning, I'm about to do my daily stuff, there's some services you've defined as critical, which you're talking about, that you have as a backup in GCP, I believe. Yeah. And I might be one of these Monzo customers that actually am put onto the backup system. So
yeah. So I guess the way that so if we were in a huge incident where like AWS is completely gone, our whole customer base, all of the payments processing, for example, would go through people, receiving their salary payments, people making bank transfers, people, buying their breakfast or getting their train into work or something. Those things would be going through Monzo stand-in. That would be our whole customer base. Depending on the kind of failure, for example, AWS being completely offline, we also support our mobile app, so you can see your accounts, you can see how much money you have, you can actually like make outbound transfers and things. But the thing that you're talking about or referring to is something that we've spoken about before, which is on testing. So Phil was also talking about thinking back to the last time you did a failover test, and maybe it was 3 months ago, 6 months ago, and that, like, I guess if it wasn't too long ago, you can be confident that your backup system works. With us, with Monzo stand-in, we're continually testing our system, so it's not like 3 months ago we knew it worked, so we're kind of confident. We're testing it like right this second. We have customers using Monzo stand-in, and those payments are being made there. We can measure it all. We can see our dashboards to see how different or not things are. We can like, we're continually building that confidence. So if we did have an incident, we know we can flip over to it, and we know what customer spend effectively would look like.
Cool. And actually, so I'm just going to stop it there because there's been a question that's come in actually that's related to that. And the question is, when we think about the topic of multiple digital and technology backups, what's the balance between cost and pragmatism with respect to cost to serve, i.e. disaster recovery, tertiary backups, building a backup bank? Where do you see the line? So I guess it kind of, obviously Monzo definitely see the line as, it's worth doing. As a customer, actually gives me great confidence that Monzo done it. As a geek, I obviously hugely geek out hearing stuff like this, but yeah, where do you think is the balance between cost and I guess pragmatism?
Like, I think the focusing on that, like the core critical business, I think makes the most sense. Being really, really hard on some of the trade-offs you're making. So I mentioned that like card spend works, and that's a bit of a broad brush to tar with, but I think that some of those, like some types of card payments won't work, and there's some of the things that we traded off against. So for example, when we launched it, you wouldn't be able to spend at a gambling merchant. There's nothing particular about spending at a gambling merchant that means that we couldn't support that. But in our usual business, we also support things called gambling block. So if you're a problem gambler, or you choose not to spend at gambling merchants, you can toggle on a block so that we will block gambling merchants. We could have added the additional complexity to Monzo stand-in to sync all of that data, make sure the gambling block works as effectively as it does in the primary platform. But instead of building that, we said, let's just decline it. The detriment to customer is super low. The additional risk and complexity is marginally high, so we can just cut that whole part out and focus on the things that our customers really, really need. And building in such a way where, I guess, we're not porting the whole of our bank again into another cloud provider. We're building such a small system that honestly we're able to run it with many orders of magnitude less cost than we do in our main platform.
Okay, so focus is king, really, is the answer.
Yeah.
Focusing on the key services and actually what the customers actually will want to run if the worst comes to the worst, and the primary cloud provider. And bringing you in, Laura. Sorry.
Just to go on that, I think what's interesting is, in some ways, that's what some of the regulation is also suggesting you do, right? It is about identifying your critical important functions, etc., and areas like payments and such, which you mentioned, Andrew. Clearly, you don't want to, no one wants to let their customer down, when they're trying to make a payment. But there may be other areas of your business that actually, if it's a day later or whatever, maybe it's not so critical.
Yeah, I just wanted to add to that question. I think this is where it's really important to define your impact tolerances and look at what are your most critical applications. And it's almost mitigating against the concept of customer harm. So you want to make sure that if you are, down for X amount of period, it's not going to cause customer harm. And in financial services, that being like, I cannot pay for something or receive my money or things like that. So I think understanding which applications are the most critical and would cause that will then help you prioritize. And that's where then that cost pragmatism will come against, because you'd want to obviously spend money on those applications that could cause customer harm. And the ones that don't, you could potentially, if you don't have the budget for it, you could leave to another time, for example.
So I guess on that, what, Laura, is simple things you can do to get kind of good return on investment, not thinking of spending the focusing on the key customer requirements, like you say, the key things that will impact the customer. I'm guessing AWS goes down. I'm picking on AWS. I actually shouldn't know. Google and AWS are great, by the way. I just want to absolutely make that clear. And my Netflix account doesn't work. I'm going to be okay. Life will be okay. I'll miss my latest update of Marvel TV that I probably shouldn't binge watch anyway. But you did the reverse there, which you discussed, payments. And actually, I can't buy food for my children. They're screaming. I've actually had this personally. I won't mention the bank. I had a problem with one of my accounts. Too much money got inserted in for some reason, and it froze my account. I couldn't believe that was but it was a check on there, making sure there wasn't some criminality going on. But it actually froze my whole account, so I couldn't even spend the money that was in the account previously. It was just happened to me. So I know how payments. But what can you do that is, you've chosen your key features. You've chosen the bits that are critical for customers, as Andrew and Phil have talked about. What can you do that's simple and won't break the bank in terms of system design to help you have a level of operational resiliency above what you would get if you just didn't do anything?
So, and I say you're going to hate me, because I always say, like, these types of things, it's like, it depends on what your architecture is like, the applications. But in terms of like specific things, it's so dependent on how you run things, are you literally like a monolith, or you contain it, like all these kind of things. But I always say to customers, if we're going to go, okay, we want to look at becoming more resilient, the 4 steps, like 4 buckets, I would always say to start with is anticipating, responding, monitoring, and testing. And then we'll divide under that things that we can do. And then obviously there's granular things, and more granular can go within that, but it's kind of a good place to start. So the anticipating bucket is almost starts at like a non-technological kind of point. And that is understanding your architecture from what are your impact tolerances, what are the RTO and RPO that you can tolerate, because if you can tolerate a higher RTO and RPO, that gives you more flexibility. If not, then obviously then it's more critical to make sure you get something up and running that might be like a active kind of architecture. So it's really critical to actually understand. And when I say anticipate, it's understanding where those failure points could be in your architecture. And so that's really key to kind of understand that. So it is architectural, but it's almost like you have to dive into your architecture and understand what's going on. And that is the first point before you start going, I'm going to add in a backup here or redundancy here, like actually understanding how your architecture works. And there are lots of things, that you can do to understand the flow of processes in your architecture, tracing services, things like that. But it's really important to understand actually what's going on. The responding aspect, actually, kind of going back to, I think, both Phil and Andrew's kind of points, is how can you respond quickly, but actually how can you respond in an automated way if possible, because actually, you know, if something goes wrong, you do not want at like 3 o'clock in the morning someone having to go and manually start rebooting things, or, you know, sort of switching over to another, you know, another instance, another region. Like, that is not sustainable. So where can we add in automation? And looking at things like event-driven architecture, can we add in those kind of services? And actually, where, when I was talking about how the cloud is opening up kind of options, because there are lots of these sort of managed services, you know, that are built for this. You don't have to create something from scratch. And so if you can use those services to help things get up and running, you know, quickly, utilize those. Like, that's what they're there for. Then the kind of monitoring. So obviously you want to basically understand what's happening with your applications, with your architecture on an ongoing basis, because you could actually, it kind of feeds back almost into anticipating, but if you can see actually, oh, you know, kind of we're getting spikes at these points of the day, that potentially might cause something to fail over. Like, if you can understand what's happening and monitor it and then take mitigating action before something occurs, then obviously you're going to mitigate against that. So you want to have monitoring in place, so making sure you've got that kind of set up. And then finally the testing. I think often where then I've seen customers not say that they're not doing it, but actually we talk about a lot of this in kind of these paper-based exercises. You know, okay, we've kind of measured RTO and RPO and, you know, kind of wrote it down in spreadsheets and things like that. But actually, in reality, what happens when this server goes down? Do we fail over to another server? You know, if this zone goes out, are we still up and running? Like, what actually happens in reality? Because it may not work how paper-based says it should do, right? And so you need to make sure that you are testing. And, you know, it could be, you know, we've got obviously chaos engineering is a lot more kind of like common now, but I will be honest, like, it's not always possible in financial services. Like, often it's kind of not allowed at this point, but there's lots of things you can do, you know, on sort of like dev environments and things like that. But definitely include testing of certain scenarios that could occur. And again, this kind of all, I would say, is like a cyclical loop, right? So obviously once you've done some testing, get that feedback. And then actually, if it didn't kind of recover in the time that you need it to, then you need to obviously make some changes to your architecture. It goes on again, you monitor it. It's kind of this, it's a constant thing. Like, I will say, resilience and building resilient architectures is not a one-time thing. And I think the regulation is great in the sense of it's getting people thinking about it and doing things, but it's not a, by January 17th, I need to submit my documentation and then I can forget about it. This is an ongoing thing, and it will be ongoing for the rest of your architectural life.
Well, and I need to kind of, you know, this has been a brilliant discussion. Time is about to finish us, I'm afraid, so we're going to have to draw it to a close. And definitely heard your and mirror your suggestion about testing. I think that's the only way you get to find out, isn't it? And you can see, yeah, there's been a lot of nodding here. So, yeah, I guess it'd be great to have 1 minute each of you from, yeah, just anything you'd like to say, I guess, about it to wrap up. But yeah, Phil, you got anything, any summary you'd like to?
Yeah, maybe I've already said it, right? But I think, you know, back to the fact that as much as my focus has been and was introduced in this, you know, in this area around regulation, you know, and sometimes we look at the regulation and it's difficult and it's hard work, but the underlying point of it is to end up with a better financial services ecosystem, right? And actually something from a selfish point of view in terms of what the EU are doing in trying to bring in third parties, and I think the UK are likely to follow suit as well. That's actually really helpful, right? And I think it will help the Googles and such of the world too, because firms like us will be even more comfortable using them with a little bit of bit of regulation that they have, as long as it's done in a, you know, the right pragmatic, sensible, risk-based, etc. way. Actually, the regulation makes an awful lot of sense. So we should feel good. So, as practitioners are working hard on it, we should feel good about the end product that will have, as Laura says, it's not an end product, but that ever evolving product that we will be building.
Cool, thank you, Phil. Andrew, would you like to give a 1-minute summary?
Yeah, I think reflecting all of this, I think that start small, keep focused, and I guess deliver the thing that makes the most sense. I think that if you're focusing on disaster recovery, where you're porting like your whole business into another data center or another cloud provider or whatever it is, I think it feels like an impossible task. But if you think about the small thing, think about what's most important, and just do that one thing and iterate from there, I think we'll all be better. Great
advice. And Laura, what would your 1 minute be?
Yeah, I mean, similar sentiments to the others. I think you don't have to boil the ocean. You don't have to do everything all at once. As Andrew said, you can start small, look at what are your critical applications and what will have the most impact. And there's that kind of like that customer harm kind of statement, and start from there and utilize services that are already out there. Like, you don't need to create things from scratch. There are lots of services, monitoring services, logging services, kind of even recovery services that exist. Utilize those because that is going to be better than nothing.
Absolutely. And I guess that just leaves me to do two things. One, to thank you three for joining this webinar. Big thank you from me. It's been brilliant to hear your views on this. And two, I guess thank those who've attended online or who are watching this in the replay. From a Scott Logic point of view, we'd love to point you to our Architecture of Bank 2030, which we'll put a link in the chat, but also is available on the website, where we discuss more about kind of future bank architectures. For myself, love to see you or hear from you at a future webinar. And yeah, thank you very much.